This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Thursday, reversing earlier declines, on skepticism that peace talks between the US and Iran will reach a deal to end the war that has bottled up oil output from the key Middle East producing region. Brent crude futures were down 26 cents to $94.67 a barrel at 0611 GMT. U.S. West Texas Intermediate crude futures climbed 14 cents to $91.43 a barrel. Both benchmarks settled little changed on Wednesday but traded in a wide range. The U.S.-Israeli war on Iran has resulted in the largest ever disruption of global oil and gas supplies due to Iran's interruption of traffic through the Strait of Hormuz, which typically carries about 20% of the world's oil and liquefied natural gas flows.
A second US-sanctioned supertanker has entered the Gulf via the Strait of Hormuz, shipping data showed, despite a US blockade on vessels visiting Iranian ports. US President Donald Trump announced the blockade on Sunday after weekend peace talks in Islamabad between the US and Iran failed to reach a deal. The US Central Command said on X that 10 vessels have been turned around and no ships have broken through since the start of the blockade on Monday.
Moving on to the top news in the energy sector.
The US nearly turned into a net crude exporter last week for the first time since World War II as shipments surged close to a record high to meet demand from Asian and European buyers scrambling to replace Middle East supplies cut by the Iran war. The US and Israel's war with Iran triggered the largest ever disruption to the global energy market as Iranian threats to shipping stopped around a fifth of the world's oil and gas supplies from transients the Strait of Hormuz waterway. Refiners in Asia and Europe that depend on those supplies have bought alternative cargoes from wherever they can, sharply boosting demand for oil from the US, the world's largest producer.
The European Union is drafting plans to tackle a looming jet fuel supply crunch and maximize refinery output, officials said. European airlines have warned of jet fuel shortages within weeks as a result of the Iran war, disrupting travel ahead of summer. Europe is more dependent on jet fuel imports, with some 75% from the Middle East, than for any other transport fuel. From next month, the European Commission will introduce EU-wide mapping of refining capacity for oil products and introduce measures to ensure that existing refining capacity is fully utilized and maintained, a draft proposal seen by Reuters said. Next, we have the top news in metal markets. Aluminium prices hit a 4-year high on Thursday as traders continued to assess the scale of damage to global supply from the US-Israeli war with Iran, while hopes of a possible peace deal lent support to other base metals. Benchmark 3-month aluminium on the London Metal Exchange rose 0.6% to $3,642.50 a metric ton by 0950 GMT after hitting $3,672, its highest level since March 24, 2022. Its record high, of $4,073.05 was on March 7, 2022 when markets were grappling with the immediate fallout of Russia's invasion of Ukraine.
China's crude steel output in March slid 6.3% from the prior year to the lowest level for the month since 2020 as margins thinned and exports declined amid the Middle East conflict. The world's largest steel producer manufactured 87.04 million metric tons of crude steel last month, the National Bureau of Statistics, NBS, said on Thursday. The March volume represented an average daily output of 2.81 million tons, down from 2.99 million tons in March 2025, according to Reuters calculations based on the data.
We will now look at the top news in the agricultural sector.
Indian Potash Limited has received offers to supply urea at around $1,000 per metric ton in its latest tender, nearly double the price achieved 2 months ago, after supplies were disrupted by the US-Israeli conflict with Iran, two company sources said. Indian buying at these levels was likely to increase global urea prices in spot markets and force smaller buyers in Asia and Africa to pay more for the crop nutrient needed to sustain crop productivity, industry officials said. India, the world's biggest importer of urea, issued the tender earlier this month to secure 2.5 million tons of the fertilizer, or nearly a quarter of its annual imports of about 10 million tons in 2025.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.